Ladies and gentlemen, good day and welcome to Sanjivani Paranteral Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is now being recorded. I now hand the conference over to Ms. Hazel Rathod. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. Welcome to Sanjivani Parental Limited Q1 FY26 earnings conference call. From the management, we have with us today Mr. Ashwini Khemka, Chairman and Managing Director, Mr. Srivandar Khemka, Executive Director, and Mr. Pritesh Jain, Chief Financial Officer. Now, I request the management to take us to the key opening remarks, after which we can open the floor for the question and answer session. Now, I hand over the call to Mr. Srivandar Khemka for his opening remarks. Thank you, and over to you, sir.
Thank you, Hazel. Good evening, ladies and gentlemen. A very warm welcome to all of you to the Q1 FY26 post-results earnings conference call of Sanjivani Parental Limited. Before I begin, let me mention the standard disclaimer. The presentation that we have uploaded on the stock exchange, including the interaction in this call, contains or may contain certain forward-looking statements concerning our business prospects and profitability, which are subject to uncertainties, and the actual results could differ from those in such forward-looking statements. Let me start with a brief overview of the company. Sanjivani Parental is a WHO certified pharmaceutical pioneer with over 2.5 decades of experience specializing in manufacturing of injectables and oral solids. The company has established itself as a leader in the industry. The company's primary focus lies in life-saving drugs, and we export our products to over 25 countries. We are headquartered in Mumbai with WHO's GMP certified manufacturing facilities in Navi Mumbai and Dehradun. We cater to major therapeutic areas, including central nervous system, cardiovascular, antibiotic, gastroenterological, anti-diabetic, and anti-allergy, supported by a strong R&D setup. We categorize our business into three verticals. The base business, which is Sanjivani Parental Limited. This is the ongoing business which focuses on formulation sales in export markets. And in the Indian market, we are primarily a CDMO player, though we have nominal presence in the domestic formulations as well. The second vertical is SPL Infusion Private Limited. This venture is for manufacturing of IV products, and here we hold 60% equity. And the third is Alivia Healthcare, which is the nutraceutical venture in Europe, where we hold 45% equity. Let me begin with macro backdrop, which played an important role in shaping the Q1 performance. The quarter unfolded against a global environment that was both volatile and complex. Trade policy uncertainty was high. Tariff structures in certain key markets were revised mid-quarter, and negotiations between regional trade blocs created ambiguity in customs documentation and compliance rules. Geopolitical tensions, especially in parts of Middle East, directly impacted major shipping corridors. The security situation in Red Sea continued to disrupt the Suez Canal route, a key artery for moving goods between Asia, Africa, and Europe. Many carriers were forced to divert vessels, which not only added incremental days of transit time, but also increased voyage costs due to additional fuel consumption and higher insurance premiums. On top of route diversions, global container logistics remained under strain. Container availability was tight in several high-volume ports. This was compounded by congestion at transshipment hubs, where vessels queued for days awaiting berths. In some cases, our consignments were loaded later than scheduled, simply because the container equipment was not available at the origin port when needed. Currency and commodity movements also added complexity. Crude oil prices moved within a volatile band during the quarter. These factors collectively kept input cost pressures alive for pharma manufacturers globally, even when core API prices were relatively stable. Turning to the pharmaceutical sector, despite these macro headwinds, the industry continued to show resilience. Demand for essential medicines remained strong, driven by both chronic therapy needs and acute care requirements. Healthcare investment trends stayed positive, particularly in emerging markets. Public health spending continued to rise, with governments in Africa, LATAM, and parts of Asia expanding hospital capacity and access to medicines. These developments support a medium-term growth trajectory for the sector. That said, temporary supply chain bottlenecks did constrain execution in Q1 FY26, but these are expected to normalize progressively over the year. For Sanjivani Parenteral, macro factors related to shipments had an impact during the quarter. However, the underlying demand remains intact, and the logistical situation is already showing signs of easing. With our diversified market presence, diversified product portfolio, and planned new product introductions and new market entries in the coming quarters, we remain confident on delivering a stronger performance for the rest of FY26. Now, coming on company's performance, Sanjivani delivered a steady performance in Q1 FY26. Overall, the growth was driven by revenues from newer products and volume expansion in existing markets. In Q1 FY26, we reported revenue growth of 8.9% year-on-year. The export-domestic mix was 73.7 to 26.3. The injectable tablet and nutraceutical mix was 50.2, 49.3, and 0.4 respectively. During the last quarter of FY25, the company successfully declared dividend for the first time in its history. This decision reflects the company's improved financial performance and underscores its commitment to rewarding shareholders while enhancing overall shareholder value. With this, let me hand over to our CFO, Mr. Pritesh Jain, for updating you on the financial performance in detail.
Thank you, Srivardhan. Good evening, ladies and gentlemen. A very warm welcome to you all. Let me share the updates on the financial performance of the company for Q1 FY26. The company reported a revenue of 17.9 crores and a growth of 8.9% year-on-year basis. The growth in the revenue was driven by revenues from the newer products and the volume expansions. The EBITDA was at 2.7 CR, a growth of 10.8% year-on-year. The EBITDA growth was broadly in line with the revenue growth. The EBITDA margins were at 15% vis-a-vis 14.7% reported during the same period last year. Profit after tax was at 1.7 crores, flat year-on-year basis due to higher depreciation and interest expense. With this, we can now open the floor for question and answers. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Akash Patel, who is an individual investor. Please go ahead.
Hello.
Yes, sir. Please continue.
Yes, you're audible.
Yeah, hi. I had a couple of questions. First one on what is the status on the Pune venture? When will the commercialization start on that front? And the second one was on the status of the Prague JV. When will the commercialization start over there as well?
Yeah, thank you. See, Pune plant, the validation batches and stability batches are already been done and the final audit has been completed. We are expecting the commercial license in this month itself and the commercial production will start by the end of this month or first week of September. And regarding the Prague, we have started the small order processing has already started. Commercialization is on. And since being Europe and a lot of restrictions are there due to the geopolitical situation, but things will be improving up within a month's time, and those will be reported once the year end in December for the European markets.
Right. Yeah. That's the main questions from my end. And any guidance on how what's on the future, how's the future looking like in the near term?
It will be as per the guidelines which we have given, and the company will be on the right path, and the things will be better to look upon.
All right. That's it from my side. Thank you so much.
Thank you. The next question is from the line of Riya Sharma, who is an individual investor. Please go ahead.
Hello.
Yes,
Hello.
ma'am.
Yes. Good evening, everyone, and thank you for the opportunity. I had to ask you regarding the capital expenditure. So what is the CapEx for the base business for this quarter, and what are our expectations for the FY 26 and 27 years?
Good evening, Riya, and thanks. So the CapEx part, we had already provided the numbers on an annual basis in the previous, and we stick to those numbers, and we do not share the numbers or disclose for the quarter-on-quarter basis. And as far as the whole year financial 26, the numbers would remain as disclosed in the previous quarter, and 27 would be too early to comment as of today.
Okay, okay. So if I have any questions, I'll get back again. Thank you.
Thank you.
Thank you. The next question is from the line of Sagar Mehta, who is an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah. Question on SPL unit. So, what is our planned revenue and capacity ramp-up trajectory for this unit, and what is the annual revenue potential we see for FY 26 and 27?
Yeah. Sagar, could you please repeat? Your voice got interrupted in the middle.
Yes. So, my question is, it's a follow-up question on SPL unit. So what is the planned revenue and capacity ramp-up trajectory for this unit, and what is the revenue potential for the FY 26 and 27 in this?
Yeah. So, the plant is expected to start within this month only. We see the plant starting and ramping up to 65 to 70% capacity in the first year. As far as the revenue potential, we have commented on the same in the earlier calls. I will again specify. We will reach around 75 to 80 crores of top line from this plant.
Okay. And sir, with regards to the order book and the export opportunity within this part, and what is the margin guidance would be from this unit?
Yeah. So again, Sagar, we have mentioned the numbers in the previous call. They are not currently on the tip of my tongue right now. We can come back to you on that.
No worries, sir. Thank you so much.
But they are mentioned in the transcript.
Okay.
Thank you. The next question is from the line of Anupal Agrawal from Lucky. Please go ahead.
Yeah. Hi, sir. Good evening, and thank you for taking my question. My first question is again on SPL unit. I interacted with you in the last call, and the idea in the guidance that you had called out that time was to get approval in April itself and to start commercial supplies from May. Why has there been a delay in getting approval from the party?
So it is, hi, Anupam. It was not that. The inspection, everything was over. Stability studies and validation batches were going on after that. And this takes time because the Government of India's new guideline on GMP and Schedule M revised has been come into effect. And that is why the reason was there for delay in this. And we have the final inspection done recently, and we may expect the license any moment. The trial batches, everything for stability has been kept already from the month of June, July, and start of August. And commercial will be starting by the end of this month or the first weekend. This will be there on the line.
And why is there a delay in getting the approval? Is it because we conducted the trial batches in a delayed manner, or what?
No, it is not that. We had conducted earlier. Now there is an online system. The online system, there are a lot of companies who are there in pipeline. We are in fact ahead. There are many companies in India who are in the line for last 8 to 9 months. And once those are processed, they can't do. For us, it has been done out of the way to take it ahead in CDSO website Delhi.
Understood. So now, like you were saying, commercial supplies will start in September.
Yeah.
Okay. Understood. My second question is, if you can maybe call out a couple of more reasons as to exactly what happened in the logistic issue. Because I'm hearing this only from your comment and not from any other pharma company comment as to logistic being a major reason for the setback in this quarter. What exactly happened? If I see sequentially, our sequentially numbers have been slightly on the poor side, particularly on the injectable side. So if you can maybe give some idea there.
Yes. So Anupam, actually, see the logistics aspect, no, it impacts certain ports. So what we experienced when shipping product to Latin America was lack of container availability, and this might have happened due to the ship shortage, the vessel shortage that is heading towards that direction. Secondly, we feel that there is some kind of choke that the Chinese carriers also create. And in the Middle East area, where we ship our product, the Iran aspect has affected the movement of the vessels. So, all in all, logistics has been an impact to our operations in terms of the shipping of the final product. Now, coming to your second, could you repeat your second part of the question, please?
It was on the injectable side. Sequentially, 13 crores of revenue has gone down to 9 crores. Any particular reason behind that?
Sir, no particular reason. As you know, the total size of the company's revenue is not that large. It is just order lumpiness. This quarter it has dropped, the next quarter it will pick up. It's nothing to do specifically with the business as per se.
To say that Q1 is slightly a leaner quarter and it picks up over the second, third, and fourth quarter?
Yes, correct. You can see our trend in the past also. Q3 and Q4 are always better for us compared to Q1 and Q2.
Okay. Understood. Any idea, any color you can give us on the pricing and volume for the CDMO business? Is that something that is affecting?
No, not as such. The overall Indian market has slowed down in terms of volume. So, we personally have not experienced any impact from that because we have a very small portion of our revenue coming from the CDMO business. And as regards to pricing also, we have not experienced much pressure on the CDMO front since these are long-term contracts and long-term relationships that have been going on for more than a decade.
Understood. Just a bookkeeping question. There seems to be a major dip in other expenses line items sequentially from 4 crores to 2.5 crores. Can you call out the reason behind that?
Yes. So there is a drop, as you said. The primary reason for those is one is the cost optimization, and secondly, we had a very fewer audits in the current quarter compared to the previous quarter.
Lower, sorry, what? Slower?
We had fewer inspections for our plants as compared to the previous quarters.
Okay. Understood. By when are we expecting the Prague income to come in the P&L? Is it December that you called out?
Yeah. December will be hearing, and in the fourth quarter, the income will be shown in the balance sheet.
So Q4 basically now.
Yeah.
Okay. I'll come back in the queue, sir, if I have further questions. Thank you so much.
Thank you.
Thank
The
you.
next question is from the line of Tanmay Javeri from Finterest Capital. Please go ahead.
Yeah. Thank you, sir. Good evening. So my question is, last Concall we mentioned that we'll be adding new products and we'll be introducing new product categories. So have we done any so far in this quarter?
In Q1 and Q2, both put together, we have added around 8 products. No specific guidance on the categories as such, but we have added 8 products to our portfolio.
Oh, okay. Thank you, sir. And so my next question is, if we see quarter-on-quarter, our nutraceuticals revenues have been going down. So, like, how do we see this segment performing in the next few quarters, maybe Q2, Q3?
We definitely see this picking up due to the geopolitical tensions. The first preference is always given to medicines. So we are active in many war zones. So that impacts our nutraceutical revenue. However, we see it will recover and grow from here on out.
Oh, okay. And if you could just give some guidance on the margin going forward for this year.
Yeah. So the margins would be in the same line as the guidance is given. So for base business at EBITDA level, we should be around 15 odd percentage.
15%. And so considering that, I guess, will it be fair to say that we'll be doing around 75 to 80 crores of revenue this year?
Yeah, correct. This year we will be doing around 75 to 80.
Oh, okay. Thank you so much. I will join back with you. Thank you.
Thank you. The next question is from the line of Pankaj Kumar, who is an individual investor. Please go ahead. Mr. Kumar, are you there?
Hello. I'm audible?
Yes, sir.
Yeah. Hi, good evening, and thank you for the opportunity. So, sir, I'm seeing that EBITDA margin is stable on yearly basis and quarterly basis, which is 14.8%. So my question is that, what is the outlook on EBITDA margin and the driver for the same? Okay, so no problem. Yeah. So, good evening, sir, and thank you for the opportunity. So I'm seeing that, sir, EBITDA margin is stable on yearly basis and quarterly basis, which is 14.8%. So, sir, my question is that, what is the outlook on EBITDA margin and the drivers for the same?
So currently, sir, what we said, we will be guiding this year only. This year will be around 15% only. However, as I have mentioned in my previous calls, we are adding new products to our portfolio very rapidly. And what happens is, when we add new products, the economy of scale is not there. Once the product is mature, like 3-4 years, then the economy of scale kicks in, and then our EBITDA margins are bound to improve. So what we see is the first batch of products will turn mature in, say, FY27. So we see the EBITDA margins improve in that year.
Okay, thank you, sir. So, sir, my second question is, I'm observing that depreciation is increased 13% year-on-year basis. So, sir, is there any reason for that?
Yeah. So whatever capex we had done recently, so the depreciation on those has been kicked in the current quarter. So this would be a steady number going forward, unless there is another major capex which we do.
Okay. Thank you, sir. Thanks from my side. Yeah.
Sir, are you there?
Yeah, we are here.
Okay.
Yeah. That's enough from my side, sir.
Yeah,
Thank you.
Here.
Yeah.
Thank you. The next question is from the line of Anupal Agarwal from Lucky. Please go ahead.
Yeah, thank you for the follow-up. Sir, if you can help us understand what is the order book currently for the CDMO business today?
Yes. As we did last year, we are going to have a growth of around 20%.
And we have order book already in place to deliver 20%? Hello?
Mr. Khimka, are you there?
Yeah. Please, Mr. Anupam, come again. Hello?
Yeah. So we already have order book to deliver 20% growth in the CDMO this year?
Yeah. What we did last year, 20% minimum.
Okay. My second question is, if you can call out the top 5 therapies and how much would they contribute in the current quarter in terms of revenue?
So, we don't specifically look at the business from a therapeutic angle. What we look at is as a market-specific, region-specific category. So LATAM and MENA regions are large contributors. However, we see rapid growth happening in the LATAM region. In the Africa region, we are filed in 4 countries in the French-speaking African countries, and we are expecting approvals from them for product registration. But the market is very slow because it's a very standard business. We are planning to even hire agents and teams out there. So the scale up on that front will be slow, but the margins will be better. So currently for this year and the next year, LATAM is going to be the growth driver for the company.
Understood. Understood. Yes, sir, I just want to understand again in a slightly more deeper manner. So our CDMO business, I believe, would be on a cost plus contract model sort of a arrangement with the supplier. Is that right? On the margin side,
See, our
the
CDMO
CDMO would be on a cost plus?
No, our CDMO business is not a job work. It's a brand which we have been manufacturing for them, and we have regulatory approvals for those brands from the DCGI as well as various countries. So it doesn't work on cost plus the manufacturing charge. It is they give a margin on it. Cost of factory costs and the margins are there, and they are in line with our most of the products are in line with our export products.
Okay, understood. On the oral side, these are formulations that we are doing. Are we making a healthy EBITDA margin in the oral business, formulation oral business?
It is at par or slightly lower than the injectable business, I would say. Injectable is better in terms of margin.
Okay. Understood. How many new products, sir, did we add in the last 2 years, let's say FY25 and FY24?
I think FY24 was around 30 and 25 was around 20, and this year we have done 8 until now.
Okay. So is there a metric that you track how much revenue is coming from these new products which is launched in the last 2 years?
Sorry, could you come again? Your voice got interrupted.
My question is, do you track a metric internally, how much of revenue is coming from new products which you have launched in the last 2 years?
No, not at the moment. However, what we see is that because of the new offerings, the customers continue to get retained with us, and our distributors in those markets are also very happy with our offerings as we keep bringing the newer products to the market. So that helps us retain the old business as well as the sales of the new products begin, and it keeps growing from there.
Understood. That's it from my side, sir. Wish you all the best and hope to talk to you next quarter. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Tanmay Javeri from Fintrust Capital. Please go ahead.
Thank you for the opportunity again. Sir, so when we say that injectables have better margins, so if I see at the presentation, so year-on-year product mix has been reducing for injectables, like we had 70% last year. This quarter we have around 50%. So any specific reason for this decline?
So if you see, you're seeing only from the mix perspective, but you see our revenue is also growing, right? We have to grow the top line of the company. So oral solids are much simpler to enter the market with, and then we pitch the injectables to our customers. So we are slowly scaling up both sides of it, and we are trying to keep our injectable business very niche so that we can earn the better margins on it.
Oh, okay. And how do you see the demands for this like evolving in India and globally? Like, are we gaining any market shares related to our peers for any specific, either in parenteral or injectable products?
Yeah, in Latin American markets, we have a healthy share of the market in injectable space. It is not product specific, but therapy, dosage form specific. In injectables, we would rank in the top 8, top 10 players in those markets.
Okay. Yeah, that's it from my side. Thank you and all the best, sir.
Thank you. The next question is from the line of CA Shaishav Vora from CA Financial Advisor. Please go ahead.
Yeah, good evening. This question regarding your last quarter earnings call, you were talking about some 48 products which were filed in the Franco-African markets. So is there any development there, any sales happening on those? What are the prospects for the next couple of years?
Sorry, sir, your voice was not clear. I heard something about the Francophone countries.
So I'm referring to the reference which was made in the last earnings call about some 48 products which were filed in the Franco-African nations. So I just wanted to know, is there any further development on those? Have any sales begun to happen? And what are the prospects for the next couple of years?
Great. So, no further development per se in terms of concrete development. We are still waiting on the registrations of those products. However, we are slowly starting to see demand of certain products in the tender business of those markets, and we are filing for expedited registrations. If our price is better and our dossier is perfect, we might get those granted early. However, as I mentioned earlier, those markets are very slow to grow in, as most of the market is branded. And once the registration even comes in, the volumes are very slow to grow in the beginning. So we are still waiting on the registration, and the revenue should start coming in by next year.
Okay, thank you, sir.
Thank you. The next question is from the line of Maheshwar Falake, who is an individual investor. Please go ahead.
Good evening. So there is an increase in the finance cost from 2 to 2.2. So what are the current debt levels?
So currently the debt levels are
Hello. What are the current debt levels?
The current debt levels are 6 crores as of now.
Okay. So there is a reduction in debt.
Sir, can you come back on the questions, because I was not able to hear you.
Yes. So there is a reduction in debt, you are saying, because last quarter it is showing 8 point something crore.
Last quarter it was showing
8 crore, I guess.
Sir, you are not audible.
Mr. Maheshwar, we can't hear you properly.
No, last quarter the debt is around 8 crore.
So yes, there are minor repayments, because those are working capital limits. So those won't be steady as we go further in this one.
And what is the reason for gross margin reduction from 50 to 28%?
See, in the recent time, the overall market was having pressure of sales. However, we managed to grow our revenue in spite of these pressures. Due to this, we had to face a little decline in the gross margins. However, we made up the gap by controlling our other expenses. So all in all, we stood at a stable level.
Sir, and my next question is, what are the current trade receivables?
The current trade receivables are in the range of 8 crores.
Okay, thank you, sir.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Srivardhan Khemka for closing comments.
Yes, thank you all for joining us today. We really appreciate your trust and support and continued confidence in us. We look forward to speaking again in the next earnings calls. With that, we conclude today's earnings call. Thank you so much.
Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.